Right. Okay, guys. Good evening. Hope you can hear me. Send me a thumbs up. Hope you can hear me properly, right? Can you please send me a thumbs up? Right. Okay. Others. Nice. Okay. So, welcome to the free paper class series. Now, in addition to the normal classes, from here in after, we are going to conduct a free class. Anyone can join. you know you can share the message with your friends as well. So this is completely a free class, so upon your request, so we are going to conduct this for a longer period of time. So let's see how it goes. Now there will be a paper series. So basically, when it comes to the starting, we are going to discuss papers which suitable for both 2026 and 2027. But by the time, when it comes to the in future, we are discussing some papers relevant to the 2026 students as well. Why? So because they are in grade 13 now and they are near to the examination. Now, initially, I have sent you a paper. So this year paper which had for the Vishaka College students, and this is the first term test for grade 12, which means 2027, and it's suitable for both 2026 A-level students as well. So today I'm going to discuss the first paper. Then after that we can go to the second paper as well. Now, in addition to accounting, you are having other economics and the business studies on Sunday as well. So we are recording the sessions as well. We are sending recordings to the group as well. Commonly, there is a WhatsApp community, so you can stay in there. All the materials are sending, not in the normal classroom. All the materials in the uh, community group. To the community group we are sending. So you can ask any questions, and I have sent the papers prior to the class, and I ask you to take a printout and do the things. There are some printing mistakes as well. I'll correct it. Okay. Hope you are ready. Send me a thumbs up. I better if you can stay with the videos like normal classes, but I'm not. It's okay. I know some students are refer the recordings because of no time, and some students inform they will refer the recording. Fine. So within 12 hours, I'm going to send you the recordings to the group as well. Okay. Can you hear me? Send me a thumbs up. Let's start. All good? Right. Okay. Nice. So now, since normally, you are having 50 MCQs in the A-level examination, 30 multiple choice and 20 short answer questions. But when it comes, since this is a grade 12 paper, there are only 25 questions in here. You can see among 25, so there are 15 multiple choice and 10 short answer questions are there. Let's start from the question number 1. So select the correct answer for the questions number 1 to 5. Write its number on the dotted line. Okay, let's see. What is the which of the following is the main objective of accounting? Main objective of the accounting. Main objective. Provide information to the parties who need information to take a judgment. Let's see all the things. To classify and summarize transactions and events, recording to a special method. Recording all transactions and events related to the reporting entity in a proper manner. Providing financial information to the interested party to make economic decisions. Providing information required to make any decision. So we can take among 4 and 5, we can take for providing financial information to the interested party to make economic decisions. So that is the best answer we can select. Send me a thumbs up. Hope it's clear to you. If you have any matter, send it to the chat box so you can ask. Right? Okay. So that is the suitable answer we can take to provide information to stakeholders for their decision making. Okay. Number 2, Following are different steps in financial accounting process. These now it gives the different steps in the financial accounting process. You can see recording, uh, recording, identification of transaction and events, summarizing, interpretation and analyze, and the classification. Now, when it comes to recording means in here the prime entry books, prime entry books, prime entry, right? Identifies the initial stage. Now, when it comes to summarizing means the trial balance and the financial statements as well, right? When it comes to the classification means the ledger accounts, ledger account, right? So among the given answers, you can see the first one is the identify B, then recording A. So identifying here, it says the source documents as well. Then A recording, which means the prime entry book. Then then E ledger accounts, C and the interpretation. So among the answers, B, A, E, C, D. So the answer is number 3. All good? Send me a thumbs up. Hope it's clear to you. Right. Let's go to the question number 3 and 4. In this question, there is a matter you need to correct it. So just correct the question. That's why I asked you to take a printout. Paid, just cut it, cut it. Paid to settle half of the creditor payable value subject to 8,500 discount. That should be the thing. Subject to 8,500 discount. Okay. So I checked with the Sinhala medium one. So that should be that should be the correct thing. Paid to settle half of the creditor payable value subject to 8,500 discount. Okay, let's see. First of all, now these are some transactions. Total assets and equity as at 1st of January 2026 of Nadi's business, which is engaged in selling cosmetics, are uh, uh, cosmetics are 900,000 and 300,000 respectively. This has been registered for value added tax. The business is registered for value added tax means all the purchases and sales subject to VAT, right? 18% VAT. All sales and purchases are subject to VAT. These are the transactions occurred during the month of January 2026. You can see the transactions. Purchase goods of which VAT inclusive price was 236 on credit. That inclusive price. Then Godakka make a part lagano. Now remember, it's like this. Sometimes they are giving that inclusive price and that exclusive price. So for the second one, the answer is 3. Right? For the first one, they are asking, sir, whether can we take the 5 as well? So the first one, providing financial information to the interested party to make economic decision. Now there are two types of accounting: financial accounting and the accounting. Now in here, they are asking the objective of accounting, main objective. Main objective is to provide the information. That's why, right? So providing information required to make any decisions also fine, but the main objective is that, right? Okay. Now, when we take about here, remember, sometimes they are telling that including price and that excluding price, right? If they give that including price, remember that include now 100. The without VAT is 100. VAT is 80. With VAT is 118. VAT including price means that is the 180. So if you want to find the without VAT and with the VAT amount in here, the given value you can divide by 118 because the given value VAT including price is 118. If you want to find the 18, multiply it by 18. If you want to find the without VAT, divide it by 118 and multiply by 100. If they gives a price as VAT exclusive price, that is the 100. So if you want to find the VAT amount, divide the given value by 100 and multiply by 80. And if you want to find the VAT amount, divide the given value by 100, multiply by 80. All good? Send me a thumbs up. Hope it's clear to you. Likewise, you can apply the things up. Likewise, you can apply the things in here. Right. Okay. Now let's see in the given question. What is the first one? Now I'm not going to read the things. First of all, let's see. It says the third and fourth. They are asking the source documents and the primary books, relevant primary books and the relevant source documents. So let's take the things together, then you can have the clear idea. Okay. So, right. First one. Now, when we take the first one, you know it's purchase goods on credit. So, you know, when we take the purchase goods on credit, that is the purchase journal. Purchase journal. Purchase journal. So, the primary book, what? So, the source document is purchase invoice. Second one, stock of which VAT inclusive price was 59,000 out of stocks purchased on credit have been returned. So when it comes to return, you know that is the purchase return journal or the return outwards journal. So you know when it comes to return outwards journal, the source document is the debit note. Paid to settle half of the creditor payable. So if we made a payment, you know it goes to the cash payment journal, and the source document is payment voucher. Payment voucher, right? Then you know, and also amount of 50,000 due from debtor Sarah was set off. Now you know, I told you, we can set off the debtors and creditors. For an example, you know, it's most of the time related to the same business. Now think, if this business sold goods to a person on credit 100 and purchase the goods on credit by 150, we can set off this sold goods against the purchase. So balance payable amount is 50. That is the term for set off in. Now you can see if there's a set off, it record in the general journal. So the journal voucher. So you can see the answers. Purchase journal, first one, second one, return outwards, cash payment journal, and the general journal. So the answer is number 5. So the source document, purchase journal, it's invoice. Return outwards journal, you know it's the debit note. Cash payment journal, it's the voucher. And general journal is also journal voucher. So you know uh, the answer is what? The answer is number 2, right? Invoice, debit note, voucher, and the journal voucher. So the answer is number 2. Hope it's clear to you. Send me a thumbs up. Hope it's clear to you. The answer is number 2, right? Next one. Now the important one. This is a good question, right? Number 5. Which of the following accounting equations show the net impact of the above? They are asking the net impact. Okay. I'm going to take the net impact. Huh? Now they are giving, let's take the same format, assets equal liability plus equity. Assets equal liability plus all the things using thousands I'm going to take. So first of all, you can see when it comes to the initial balance. So you know the first of all, they have given the initial balance to you. Opening balances, total assets are 900. Total assets are 1st of January, right? Of January transaction, you can see. Opening balance is assets are 900, equity 300, right? So you can see the liability is 600. Liability is 600. These are the opening balances. Now, when we take about the transaction first one, now be careful. Now. These are with VAT. Now, you know, if the business is registered for the VAT, we can claim the VAT. We can set off the VAT. If we purchase something, now you know, if there are VAT engaged with the purchase, we are not recording in the purchase on the purchase price VAT. You know, in the purchase account, we are not recording the VAT. That we can since claim when we purchase the goods, the VAT amount we need to concern as liability decrease. Why? We can claim the VAT. When we sell the goods, if we charge the VAT, right? So our VAT liability increases. So we need to record it as our VAT liability increases. Now you can see purchase goods of which VAT inclusive price means 236. I told you. Now in here you need to find the without VAT amount and the VAT amount. This is the VAT inclusive price. If it is the VAT inclusive price, you can see this is the 180. 236 means the 180. 236 means the 100. So divided by 18. Now you can see the VAT amount included in here 36. So the without VAT is 200. So when we purchase goods on credit, our inventory asset increased by 200. Why? Because the without VAT amount we take to the inventory. But you know, our liability increased by 236 as creditor. Right? Totally we need to pay to the creditor with VAT amount. Right? But the VAT amount we can claim, so the 36 we need to concern as VAT liability. Sorry, take it to the liability side. Liability. So I have recorded in the side. Hope it's clear. You send me a thumbs up. Remember the VAT amount included in here, we can claim. So we decrease from the liability, right? So the next one, the second one, stocks of which VAT inclusive price. The VAT inclusive price is 59. Out of stocks purchased on credit have been returned back to the supplier. Now, VAT inclusive price means 59,000. So that is the 180 divided by 100. If you want to find the VAT amount included in the return goods, it's the 9. So without VAT is 50, VAT amount is 9. So the with VAT amount is 59. Now we return the goods to suppliers. So our inventory decreased by 50. Inventory. And remember, our creditor decreased by 59. Why? Creditor decreased by the with VAT amount. But remember, when we purchase goods, since we can claim the VAT, it decreases. But when we return those goods, again we need to remove the claim VAT amount. That's why we need to concern as increase VAT. Now, if we take the VAT account, then now it's a liability account. If we purchase the goods, we debit it. Why we can claim it? But when we return the purchase goods, since we can claim, we need to remove the claimed amount. Again, the return goods we need to concern as VAT liability increases. Hope it's clear to you. Now, VAT liability increased by 9, the claim amount. Send me a thumbs up. Hope it's clear to you. Right? So, hope it's clear to you. I need the thumbs up. If you can't understand, please let me know, guys. Right? Since we can claim it, that's why we concern as VAT liability increase. Right? So, this is a free opportunity to you. So, I need the full support from you. Right? So, pay attention and you can understand. Okay? You can understand, let me know. Okay? In the reaction. Now remember, when we take about the VAT, okay, I got one like this. So now remember, when we purchase the goods, our VAT liability, like that is what we can claim the VAT. That is kind of claim thing. Now it is a indirect tax, right? Now input VAT. So now there are two kinds of VAT: input VAT and the output VAT. If it is the business, when we purchase the goods, if there are VAT, since we can claim it, we need to concern as VAT liability decrease. Why? When we purchase the goods, we pay VAT. When we sell the goods, we collect VAT. අපිට හම්බෙච්ච VAT ගාන අපි ගෙවපු VAT ගානයි දෙකේ net impact එක තමයි අපි රජයට ගෙවන්නේ. අපිට VAT හම්බුණා නම් අපි VAT හම්බුණා නම් sell කළා inventory 100ක් අපි VAT ගෙවුවනම් item ගද්දි 80ක් අපි government එකට දෙන්න ඕනේ 20යි. Why? We can claim them. All good? Send me a thumbs up. So we can claim that. Now, when we purchase the goods, we need to consider as our VAT liability increase. Right? So when we purchase the goods, we need to concern as our VAT liability decreases. Why? When we purchase the goods, we need to concern as VAT liability decreases. Why? When we purchase the goods, we pay VAT. So we can claim it from the VAT we collect through sale the goods. So when we purchase the goods, our VAT liability decreases. Right? Government එකට ගෙවන්න ඕනේ නෑනේ purchase කරලා VAT එකට ගෙවද්දි ඒක claim කරන්න ඕනේ. හැබැයි අපි sell කරද්දි අපිට එන VAT අපි government එකට දෙන්න ඕනේ. If there is a sale, our VAT liability. Now, if we take this scenario, when we purchase the goods, our VAT liability decreases. That's why we deduct the VAT. And when we return the goods, the claim amount again into reversal. That's why return outwards. Again we record under there. Okay. Next one. Paid 85,000 to settle half of the creditor payable value. I told you to correct it, subject to 8,500 discount. Right. Now, paid to settle half of the creditor payable. Now, let's see how much is payable. We purchased 236 goods. We returned 59. So, tell me the amount payable. 236 minus 59. So, we need to pay to the supplier 177,000. Now, we are going to settle half of that. Half of that means what? 88.5. 88.5. We are settling is subject to 8,500. Now, we are paying cash 80,000. Why? So we are receiving 8,500 discount. So remember, we are paying cash 80, but our liability decrease 88.5 as creditor. When we made the payment, we are not concerned in the VAT value. Huh? And remember, we are receiving 8.5 as the discount received. Discount received. We are receiving 8,500 as the discount received. Hope all good, right? Then finally, amount 50,000 due from debtor Sarah was set off against the amount due from to her as a trade creditor. Now, trade debtor set off against trade creditor. Now, when we set off the trade debtor against the trade creditor, you know, debtor asset also decreased by 50,000. Debtor liability also decreased 50,000 as creditor. Debtor set off against the creditor, so creditor decrease as well as debtor. Now tell me the totals in here. Can anyone send chat box please? I have recorded all the things. Can anyone send chat box the totals? Anyone? Just balance it off and tell me. 900 plus 200 minus 50 minus 80 plus minus 50. How much? 920. Okay. Then liability. Can anyone tell me the totals in liability? 600 plus 236. So is that the set off and must say? No, written off means like we are removing the debtors from the book's value. It's because of the debtor being bad debt or something. Set off means we are set off against debtor and creditor. So liability 611.5, right? 11 point. Okay. So equity seems 308.5. Hope all good. Now, in the question, they are asking the net impact. They are asking the net impact. Net impact you can see in here. So the assets increased by 20. So the assets should be 20. So that is the answer number 4. We are taking answer number. See, let's see the other thing. So liability, you can see liability 600 plus this is 11.5. The next one, equity, you can see 300 to 308, which means increase by 8.5. So 11.5 and the 8.5. So the correct answer is answer number 4. All good? Send me a thumbs up. The correct answer is answer number 4. Easy and a good question. So and let's go to the other one. Question number 6. If you need, you can take a screenshot. Right. So let's go to the question number 6. And now those who are joining for the classes as a new student, you can go to the guruniwasa.com website. You can see it's mentioned here. You can check. So all the previous recordings are available free of charge to you. Even grade 12 things. If you are not familiar with the that and the other things, go to the guruniwasa.com website and register as a new student. And all the now you don't need to pay for the previous recordings, and we are keeping the recordings till your examination. And all the tutorials are also available in the website. You don't need to purchase it. You can download it and take printouts. Now in grade 12 2027 classes, we are in the accounting concepts. In grade 13 classes, we are in the standards. We just started the LKS2. Okay. Now let's go to the question number 6. Which of the following shows the only the output of the management accounting? They are asking the management account. Management accounting outputs, not the financial accounting output. Overhead analysis sheet, yes, marginal cost information, but P&L is the financial account. Budget reports, accounting ratios, profit statement, profit or loss statement. Investment appraisal information, budget report, SFP, it comes under financial account. Profit or loss statement, financial portion, budget report. Overhead analysis sheet, marginal cost information, and the budget report. So the answer number 5. So question number 7. Question number 7. Which of the following statement is true? They are asking the correct statement, right? By the agreement of the trial balance of a business shows the accuracy of the accounting process. Now, agreement of the trial balance means there is accuracy in the ledger. Ledgers have been properly recorded both debit and credit, but it doesn't mean the accounting process is accurate, because in the accounting process there can be errors. So the accounting process is correct is incorrect. Send me a thumbs up. He can't say our process is correct because there can be omissions as well. Omissions, commissions, and all other things are there. For the sixth one, the answer is number 5. Summarize information related to credit sale of trading goods is recorded on in the debtor control account. Yes, that's correct. Summarize information, we take it to the debtor control account. Why? So other information goes to the debtor subsidiary ledger. All the source documents of a business are prepared by its accountant, no, by the bookkeeper. So accountants are in here for the decision making. Petty cash journal is also function as a ledger account, no. Petty cash journal is just the prime in the book. All the purchase of trading stocks are recorded in the purchase journal, no. Only the credit purchase. We are not recording all the purchase. Section number 8. Which of the following is not an enhancing qualitative feature according to the conceptual framework? Now you know. Now when we take about the conceptual framework, you know, according to the qualitative characteristics of financial information, there are two fundamental things and the four enhancing characteristics. What are the fundamental? You know, relevance and the faithful representation. Now, what are the enhancing? You know, when it comes to enhancing, comparability, yes. Understandability, yes. Verifiability, yes. Timeliness, yes. So, but not the materiality. Materiality is not the enhancing character. So, the answer is number 5. So, it's in the conceptual framework. It's in the grade 13 first lesson, but you know, when it comes to the grade 12 also, you need to have the idea about only the qualitative characteristics of financial information. Right. Remember these are the there are four enhancing. So these are the given four. So fundamental, relevance, faithful, percentage. Right. Are you okay up to here? Send me a thumbs up. එම්මින් ඉන්නෝනේ නිදා ගන්න බෑ. better if you can stay with the videos like classes. I know because there are other students who cannot like to stay with the videos, but I suggest in by the time, so we can have the interactive. Okay, are you okay, Abhi? I need the thumbs up again. Hope all good. Right. Please, uh, I need the interactive. So if not, it's too hard to do the things. That's why. For the question number 6, the answer is the answer is number 5. Okay. Let's go to the other one. Let's go to the question number 9. In question number 9, there are some mistakes. You need to please correct it. So in question number 9, there are 2 mistakes. I checked in one. So when it comes to question number 9, you need to correct for the school students. So for my school students, you are getting free marks for these things, right? Because my schools also we are giving uh, Vishaka papers. So for the errors, I'm giving free marks. Okay. So 1st of April, year 2004. So this should be 31st of March 2025, right? And it should be 2000 each week. Should be 2000 each week, right? Now let's see. Information related to particular business is provided for you. Total assets and liabilities are there. Opening and the closing. The owner has taken 2000 each week during the year. Also, the owner has invested in a building worth 400,000 as additional capital during this year. Owner has invested building. Sales invoice 100,000 related to credit sale made on 31st of March 2025 has not been recorded in the books. What is the net profit or loss? Net profit or loss. Hope you can remember the profit equation. You know profit equal closing net assets minus opening net assets plus drawings minus additional. So you can see closing net assets minus liability, 2000 minus 900. But there is a matter, when it comes to the sales invoice, not recorded means, in sales invoice, what is the double entry? Sales account credit. It is an income account. Debtor control account, debit. It is an asset. So sales invoice not recorded during the period, which means ending date, which means closing assets was underestimated. Closing assets was underestimated. Sales invoice not recorded means closing assets was underestimated. How much? By 100, right? By 100. So when we take it, we need to add 100 as well. Why? So our total asset is 2100. 2100. So the liability is 900. So remember, sales invoice not recorded means our debtor control omitted. So debtor control closing balance is underestimated. දැන් ඔයා හිතනවා එතකොට සේල්ස් එකක් ගන්නවද නෑනේ. අපි ප්‍රොෆිට් එක කැල්කියුලේට් කරද්දි ප්‍රොෆිට් එක ඇතුලේ ඉන්කම් එක්ස්පෙන්ස් තිබ්බට අපි income expense concern කරන්නේ නැතුව තමයි profit equation ගන්න. That is how it goes. So we are not taking it. So when we take about the opening net assets, you know, opening assets 2000, close opening assets 1000, and opening liability 600. And the other thing you can see, owner has made drawings 2000 each week. Now we have taken all the things using thousands. 2000 each week, you know, in uh, annually there are 52 weeks per year. Per year, remember, there are 52 weeks. So 2000, we are taking 2. Why? All the information has been rounded it off to 1000. So 2 multiplied by 52, right? Because 2000 into 52 weeks. And owner has invested 400,000 additional capital. Now tell me. So equal 2000, 100 minus 9, how much? 2100. Tell me the answer. 2100 minus 900. 2100 minus 900. Uh, so the net impact of this one is, you know, 400 minus 400, right? So 800 plus 400. So you know, in here 2100 minus 400. So you know, 52 multiplied by 2, which means 104. Additional capital is minus, so minus 400. How much? 2100 minus 400 plus 104 minus 400 should be 2100. Sorry, it's my mistake, right? Sorry. 2100 minus 900. 2100 minus 900. 1200. 1200. So the answer is 504, right? So 504. So any answer? Yes, answer number one. 504. 50. Right. Hope it's clear to you. Send me a thumbs up, guys. So I don't know why you can't understand, because I have properly explained. I don't know you are taking this as a joke or not. I'll try to explain it my maximum, because I can't teach the entire lesson. Don't take this as a serious, because it's the opportunity to you guys. I'm giving you of charge. If you can't understand, so contact me after the class. I'll try to. Not a joke, why? Because you need to have the proper idea about the syllabus. Because before doing the papers, you need to have the idea about some sort of idea about the syllabus. Don't again take, I can't understand, right? So I can't take the entire 2 hours and explain it. Next one. Okay, next question. The following information of a business has been provided to you. These are the things provided to you. So discount received, credit sales, credit purchase, administration and distribution. Discount allowed, doubtful debt, drawings, opening stocks, profit on disposal of machinery, losses on disposal of motor vehicle. All the stocks have were sold during the year. Total income and total expenses. Now you know, let's divide. Discount received is an income. Cash sales is an income. Credit sales is an income. Cash purchase is an expense, right? Credit purchase is an expense. Administration expense is an expense. Discount allowed is an expense. So doubtful debt is an expense, right? So allowance for impairment losses or the provision for doubtful debt is not an expense. Doubtful debt is an expense. Remember, drawings is an equity we can't take. And you know, when we calculate the cost of sales, under cost of sales we include the opening stocks. Because of that, opening stock is an expense. Why? Opening stock we take it to when we calculate the cost of sales as the plus. Cost of sales is an expense, 10 year terms. Opening stock is an expense. Why? It's included under cost of sales. Cost of sales is an expense, right? So profit on disposal of machine is an asset. So it is an income. Losses on disposal of motor vehicle, it is an expense. Now we can take, can you take the total of the income and tell me the total? So tell me the answer. Total of income is for how much? 1520. Total expenses, since all the things are things sold, we can't take the uh, closing stocks. So can you tell me the total of the expenses? Total of the expense 400, 600, 300, 10, 15, 50 and 20. These things are expensive as well as 1390 or 95 should be 5. Why at the end this is there's a 5, so it should be 1395. So the answer is number 5. So the answer is number 5. Right. Let's do the petty cash one. Number 11. I'll give you a few minutes to do the petty cash one. Number 11. When you take this kind of a petty cash question, there is a matter in this question. So just take it, just correct it as 100,000. School students, you are receiving free marks for this one as well. So you are receiving free marks for this one, 9, and as well as for the 5 as well. Because in there was a matter with the 3 to 5 transactions. That's why for the 5 also I'm giving 5, 9, and 11. Do it and tell me the answer. Send the answer to the chat box as a private message. Anyone? What is the answer? Let's see. I'll give you 2 3 minutes. Do the from here in after thing. Let's see. So let's see the question. Right. See the question. Huh? Information about the petty cash transaction. Now I told you, if you take a petty cash fraction, what is the best thing? So I correct it as 150,000. What you need to do, you need to draw a timeline. You can see there are December, January, November months you can see. So draw 3 timelines: December, January, and November. Sorry, November, no, starting from November, December, and January. These are the 3 time periods. Now, when we take about this one, petty cash balance as the 30th November, 8,600. November 8, balance 8,600. This is how we record the balance, right? And petty cash expenses incurred during the month of November, 111,400 during the month. Normally paid amount I am recording here, impress I'm writing on top, right? 1114. Petty cash expenses of December 2025 are lesser 30 when compared to the same of November. Now, December expenses lesser by how much? Lesser by 30. So 111,400. How much? 111,400 minus 30,000. Can anyone tell me how much? It's 81,400, right? So the December petty cash expenses are how much? 81,400. 81,400. Next one. Petty cash expenses of January 2026 is more than 25,000 compared to the previous year of December. Compared to December, January month petty cash expenses are 25,000 higher. Can you tell me how much is the 25,000 if we add 25,000 plus 81,400? How much? It's 106,400. January month expenses 106,400. We have taken. The petty cash flows was decided to increase up to 150,000 from the year 2026. From January month onwards, they have decided to increase up to 150,000. Up to 150,000. Now, which means December and November the same petty cash flow. Let's see. Now we have taken the given information. Now, first of all, see the requirement petty cash balance as at the end of the January. January end balance, as well as petty cash amount reimbursement on. They are asking the amount reimbursed on when 1st of January, January පළවෙනිදා එදා balance එක කියන්නේ December balance එක January පළවෙනිදා reimburse කරපු ගාන January 31 January 31st balance එකයි එකමහා. Now we can find the November impress by taking the total of, impress means amount we spend plus the balance. The total of these two, how much? 120. So the petty cash impress of the December also 120. All good, send me. Because the impress was increased up to right. So we can take it like this. Okay, just right. Now we can find the balance available on the December. Impress 120, expense 81,400. How much is the balance? How much the balance? Can anyone tell me the balance available? Balance available, how much of the end of the December? 38,600. Yes, the balance available 38,600. So let's see the reimbursement. Reimbursement should equal reimbursement should be 150,000, right? In reimburse to 150,000. If so, the reimburse should take it to 150,000. So reimbursement should take amount we spend plus the increase amount. Increase amount how much? Increase amount by 30,000. වැඩි කරපු ගානයි expense කරපු ගානයි දෙකේ total එක තමයි reimburse කරන්න ඕනේ. කීයද reimburse කරන්න? Can anyone tell me? How much we need to reimburse? Yes. How much we need to reimburse? Total of these two. You can take total of these two or this minus this. දෙකම එකයි. මේ දෙකේ total එක ගත්තත් හරි මේකෙන් මේක අඩු කරලා එන ගාන ගත්තත්. How much? 150 minus 38,600. How much? Anyone? 111,400. එහෙම answer එකක් තියෙනවා. Answer number 104. Right? Petty cash balance how much? You can see we had 150. We spent 106,400. How much the balance? This minus this. You get how much? 43,600, right? 43,600. So the balance is how much? 43,000. So what is the answer? The answer is number 1. Answer is number 25,000 වල increase වෙනවා කිව්වොත් අරක ඒක මේ ප්‍රශ්නේ අවුලක් තියෙනවා. increase up to කිව්වහම මම ඒකයි ඒකට free marks දෙන්නේ මොකද increase up to 25,000 කිව්වහම වැරදි increase by 25,000 කිව්වොත් හරි මෙතන up to කියන එකයි ප්‍රශ්නේ ඇයි up to කිව්වහම ඉතින් 150 වලින් up to කියන්නේ 25000 දක්වානේ ඉතින් 120 ඉඳන් 25,000 වෙනකන් ගත්තාම වැරදි තේරුණා ඒක එහෙම ගත්තනම් ඔයාලා අර තිබ් එකේදී ගත්තනම් අර එහෙම ගත්තනම් ඕකේ බට් දැන් මේකේ තිබ්බ මේක නිසා මම right buy තිබ්බනම් හරි buy නෙමෙයිනේ up to කියලා තියෙන්නේ. So the answer is number 1. Number 1. Anyone, what is the answer for the 12th one? What is the answer for the 12th one? Now you may having a matter in here. Information of a business registered for a VAT is as follows. This is a VAT registered business information. This is a VAT registered business information. Now you can see there are some information given with VAT. But in here not mentioned. If so, if the things is not given, to concern is this is as without VAT. Without. හැබැයි exam එකේ ඔයාලට බය වෙන්න එපා. A level වල without the with the කියලා දෙනවා. දාන්න බාන්න thumbs up. Details දීලා නැත්නම් it is a without VAT thing. Hope it's clear to you. Now you can draw a VAT control account. Can දීලා නැත්නම් without the with the කියලා නිකන් නම් it's a without. So they are asking what? Which of the following shows the correct balance of the VAT control account 31st of January? So I'm going to draw the VAT control account. Cash purchase without VAT. Now this is the purchase price. So you need to find the VAT. How to find the VAT? 400 divided by without VAT means it is the 100. Means this is the before that you can see there is a balance. Initially the VAT control account balance was 130,000 credit. Right. Now let's see. This is the without VAT. So how to find the VAT amount? You can find the VAT amount 400 divided by 100. Without VAT means it's 100. So multiply by 18. So VAT percentage is 18. Current VAT percentage, right? VAT percentage 18. Right? So how much? So it is 72,000. The cash purchase. Cash purchase, why? When we purchase, we pay VAT, we can claim, so we debit it. Right? We debit it. Credit purchase with VAT. With VAT means this is the 180. Find VAT multiplied by 18. How much? Credit purchase. How much? It's the 354 multiplied by 100 divided by 180. Multiply by 18. How much is the I think. All good, send me a thumbs up. Hope it's correct, right? Just check the answer and tell me. Right. 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 Okay. Next one. Then credit sales with VAT. With VAT means this is the 1062 divided by 108 multiplied by 18. How much? Credit sale. You can take 162. 162. Then the cash sales without VAT. So without VAT means this is 800 divided by 100 multiply by 18. That is the without VAT. How much? You take cash sales 144. Cash sales 144. Return inwards with VAT 141.6 divided by 108 multiply by 18. Return inwards means the sales return. When we sell, we credited. When the return inwards are there, you need to debit it. How much the return inwards? It's 21 points. Return outwards without VAT. So 100 divided by 100 multiply by 80. So return, when we purchase, we set off the VAT, but when we return, again, we need to credit it. VAT paid during the month 220. Cash we paid 220. So now you can take the balance. Can anyone tell me the balance in how much the balance? Total and balance? You can see the total is 454. 454. 450. So once you take BCD 86.4, PBF 86.4. So it's a credit side means it's a liability, debit side means it's an asset. Goes to the credit side means it's a liability. 86.4, it's a liability. If the balance comes to the debit, which means it is an asset. So in the examination, they are giving the VAT rate. In the, I checked with the single medium one. In single medium one, they have given the VAT percentage. Make English medium में type करना. Right. Okay. And remember, there is my WhatsApp channel, guys. Make sure to follow because I'm sending daily quizzes. Check in WhatsApp. Uh, A level, advanced level accounting with Heshan Sir. I'm sending daily quizzes, right? So you can follow the quiz and do. Now currently I have sent uh, 7 quizzes, so you can follow it and do the quizzes in there. Send thumbs up. So there is a WhatsApp channel. It's a free platform. Anyone can join and do the quiz. And the other thing, yeah. So share this free class message with your friends because we are planning to do it for a longer period. If the student count comes under 100, so we are conducting it for a longer period. CR means liability, right? Credit means liability. Okay, let's go to the other one. Well done. 13, 13 and 14. Okay, let's see. Which of the following concepts give the basis for deduct cost of sales from the sales income? What is the accounting concept? Yes, that is the matching concept. Number two, why? Expense match against the income. Which accounting concepts give the basis to deduct drawings from the retaining earnings column in the accounting equation? That is the accounting entity concept. By drawings we concern as owners uh, withdrawal. So owner and business concern as two different parties. Next one. Number 15. 15. Which following accounting balances of Ramit's business are provided? Uh-huh. So, for you as at 31st of March 2025, what should be the equity? They are asking what should be the equity as at 31st of January. Now remember, you know, simply they are giving the income expense and this is assets, liability. The net impact of this one is the asset. You know, asset. Purchase advance is a asset, right? Why? We paid. Sales advance is a liability. Why? Now, purchase advance means what? Before purchasing, we made an advance. Is a asset. Sales advance means what? Before making the sales, someone gave us the advance. It is a liability. Cash is an asset. Bank loan is a liability. Right? Okay. Now, when we take about this one, they are asking the equity as a 31st of January, which means that is the closing equity. This is the closing equity they are asking. The balances is also 31st of January, right? Send me a thumbs up, right? All good, right? So in here, equity equal net assets, net assets minus profit in here. Now you know net assets means assets minus liability. These are the assets. 400, 400, 3,800 in year Y. Like cost minus accumulated depreciation 3,008. So you know 400 uh, plus 3,800 plus 300 plus 150 plus 5,000. How much? It's 9,650. 9,650. Liabilities are 1,300 plus 200. 1,000, it's 500. You can see profit means income minus expenses. So 15,000 minus 8,000, right? You can see in here 8,150 minus 7,000. How much is the answer? Yes, yes. How much? The answer. That is the 1,150. 1,100. The answer is number 5. All good. Send me a thumbs up. 1,100. right? Don't we stop? No. So in here we take the sales purchases only, because closing stock comes to the net, because they are not giving the cost of sale. Cost of sales comes to the closing stock. Right. So first 15 done, right? So we did this kind of questions in the right. So today I'm not going to do the 16 onwards. So next day I'll do, because with the very first day, because you're familiar with this one. So uh, yeah, because it takes time. Some guys are not having the printouts as well. Normally I have taken 1.5 hour other subjects as well, but for accounting my plan is to take 2 hours, 1.5 hours into 2 hours. Send me a thumbs up. ඔක්කොම class තියෙන්නේ 1.5 hours free class එක. හැබැයි ගොඩක් මගේ එක 1.5 2 hours අතර depend වෙනවා යන විදිහත් එක්ක. ඒතර අද මේක ඉවරයි. for the first day එක, because I'm having to plan some other things as well. ඉතින් ඔගොල්ලෝ ඉතුරු ටිකත් කරන්න, do the other thing, and I'll send the part 2 of this one as well to you. දැන් මේක ඉවර කරලා ලබන සතියේ part 2 එක මම පටන් ගන්නවා. ඉතින් ඔගොල්ලෝන්ගේ පැත්තෙන් support එක ඕනේ, කට්ටිය join වෙන්න active සහ share කරන්න message එක. එතකොට අපිට දිගටම යන්න පුළුවන්. ඊට අමතරව කොහොමත් මේක මම සාමාන්‍ය කාලයක් යනවා අපි free class එක. 26 27 දෙකටම match එකා වගේ 6 අයව target කරලා වෙනම විදියකටත් යනවා. Right? So I'll send the video to the group as well. Sunday you are having economics and the DS, make join as well. And uh, if you need, you can join for the normal classes as well by joining to the website. You can visit the website and check the videos and the other things as well, right? Okay, enough. Let's meet next week in the free class. Thank you for the participation. Good night, Busan, and God bless. Bye. Bye.